and rare earths are the new front line in geopolitical decisions. There was no planes flying for 2 years during COVID, right? But when we came out of lockdown, when Boeing and Airbus put in these orders again, and aviation was back, half the year went up 250 something percent in 18 months. Indium's a really good example, Gareth. For example, you can swipe your phone and you can scroll and stuff because of indium. Like gallium. Gallium is 98% produced in China. Gallium has over 3,000 military applications as well as civilian uses. Any of our clients who bought metals and stayed in alignment with our recommended strategy, 3 to 5 years, have made money. Every single one, nobody has lost money. These raw materials, they were literally waste, until in the 1960s. And the whole reason we've created this offer to private investors, is when there's a shortage, there's an inventory we can reach for.
I'm Garrett Wong, and this is the Investing to Win podcast. How do you define success, and what does winning look like for you? Louis, welcome to my podcast.
Garrett, thank you very much. I'm happy to be here.
Yeah, no, as audience can hear, Louis is from afar, and we were just talking in the green room. We both just came back from recent trips, so we're kind of getting back on track here with a Monday morning podcast. So, Louis, why don't you tell the audience a little bit about yourself and your background?
I will indeed. Thank you, Garrett. So, my name is Louis O'Connor, and as Garrett pointed out, you can probably tell from the accent, it's similar to Newfoundland, Newfie accent, but it's actually across the pond. So I'm in Ireland. I am Irish, originally from Dublin. And our business, though, we'll be talking about today, is based in Europe as well, but right smack bang in the middle of Central Europe, in Frankfurt in Germany, where we are an industry supplier of rare earth metals and strategic metals, technology metals, and I'll get more into it as we progress.
Yeah, I'm really excited, as I was saying in the green room, about this interview. And when your name crossed my desk as a potential guest, for me, we talk a lot about businesses and wealth and real estate and different investment classes. I've had crypto people on. It's the first time we've talked about metals. And I know, I want to say it's a hot topic, right? But before, that's more of a teaser for the audience. So they're going to continue listening to us because we're going to be getting into, metals as an investment class. But why don't you, I know you've been doing obviously a lot of things. If you wouldn't mind, take us back to even as a young man, what you were doing and kind of where you got your background from.
Sure. So I left Ireland quite young, Garrett, and I went to live in Germany. So that's hence, I speak German and lived there for 10 years. And speaking of property as well, and my first choice usually always is property. So my first property I bought was in Ireland when I was in my early 20s. And then since then, I bought property in Germany, and I lived in the Americas for 20 years. After Germany, I went to the Americas and worked in sort of real estate property business in Panama, Central America. Panama had a big property boom. The first 10, 15 years of the millennium after the canal was handed over. And I bought property in Panama as well. So that's funny enough, we'll be talking about metals, but property is still my number one sort of choice. And then, so I was in Central America, and I wanted my two kids to come back and before it was too late, get some education here in Ireland as well. And that's how I then sort of reconnected with this company in Germany. But yeah, my background actually is sort of mostly real estate until 5 years ago, and I still obviously dabble in that as well. But our main business today we'll discuss is a very hot topic: rare earth metals, strategic metals, technology metals.
So what drew your interest 5 years ago into this industry?
It was a little bit longer than that, actually. It was going back as far as about 2015, maybe 2017. And actually, funny enough, I went to a conference in the US in Las Vegas at the time called Freedom Fest, which is a sort of I suppose it's a libertarian sort of, maybe a little bit political, but I wasn't there for that. I'm apolitical when it comes to investing, of course. But I'd heard it was a good place to maybe scope out new ideas and alternative investments and things like that. And I didn't know at the time one could physically own these rare earth metals. Um, I thought it was a very, very closed industry that, the only trading was done really between suppliers or producers. And then, they were selling directly in bulk sales to manufacturers like Apple and Siemens and BMW. But yeah, I came across this company in Germany who their core business is they are a supplier. They've massive, massive turnover. They buy metals, not always from China, but in a lot of cases, like gallium, it would be China, um, and they resell them to manufacturers. So they're was a tier one supplier to companies like Siemens, Samsung, BMW. But what we'll talk about today is they have a sort of a side business where they invite private investors to participate in the supply chain. So private investors can buy gallium, germanium, indium. Indium's a really good example, Gareth. For example, you can swipe your phone and you can scroll and stuff because of indium. And it really amazed me at the time. I remember thinking that, how many times a day do I touch indium? And I've never once thought, what is this material that allows you to do it? And I found out at the same time, number one, what it was, and two, that I could physically own it, and that there are some characteristics that sort of determine or define why it makes a good asset class as well. And it's the same then for, in one smartphone alone, there's 12 or 13 technology metals, let's say. So they are rare earths and strategic metals. There's 12 or 13 semiconductors in one phone. And these are the raw materials we're talking about, the backbone of manufacturing in the 21st century.
I'm going to be showing my naivety here, and that's why I love the podcast so much, because I do it to learn and meet great people. So when I think, and I'm sure my audience thinks of metals, okay, obviously gold, silver, right, nickel, these typical ones where you're talking about owning. Can you define for the audience? Let's just go right back to basics. What a rare earth metal is.
Yeah, good question. Actually, it's good to. So the best place to begin is let my company is called Strategic Metals Invest, right? And strategic metals, obviously, it's not a scientific term; it's an umbrella term for. One example would be the US Geological Survey lists 45 to 50 metals that are strategic to US and even Canada, Europe. They're strategic to all nations' economic prosperity and increasingly military capabilities. So there's about 40 that you could say are really strategic. Now, not all of those metals are rare. Some of them are base metals. There's an abundance of them available. Doesn't mean they're not a good investment. But what we focus on is, let's say, strategic metals as an umbrella term, and then below that are rare earths. Rare earths are a group of I suppose the best way you could nearly describe them actually as specialty chemicals as opposed to metals. And the reason for that is they do not occur naturally in large concentrations in the Earth's crust. So they're always found as a byproduct of another raw material. Yet at the same time, there's huge demand for them. There's a scarcity in the production, and there's generally a sort of a supply concentration risk as well. Just to give you some examples, so there's 17 rare earths, and there's probably four that we determine that are, we sell all 17 to industry, to manufacturers, but there's only about four that are short in supply, hugely in demand, have the most applications, and have a sort of a supply concentration issue. So that's what makes them relevant as physical assets, Garrett. So I suppose another thing to say as well is, despite the name, not all rare earths are rare. Some of them are as common as base metals. So we focus with private investors on the ones that are really, really short in supply and that have the most applications.
Yeah, I mean, when you're just throwing out some names here, gallium, germanium, indium. I remember, because I have a science background, studying those in university. But I mean, to me, gold. I mean, it seems rare because I don't have it in my hands. How rare are we talking about when you're talking like in terms of mining? Because the rarity would make something more valuable.
Yeah, yeah. In fact, they do or have been outperforming precious metals. In terms of from an investment perspective, I'll use one example: hafnium. Hafnium is a byproduct of zirconium mining. So there isn't one significant mine. There isn't a mine that exists for hafnium. There isn't a mine that exists for gallium because they're a byproduct. Like gallium's a byproduct of aluminum. But I'll go back to hafnium. Hafnium's a byproduct of zirconium mining. So for every 50 tons of zirconium, you'll only get 1 ton of hafnium. So that's the relationship between how much hafnium is available at any given time. In fact, there's only about 70 to 90 tons of hafnium produced every year, which you could just about fit on the back of a big truck. Yet, hafnium is a critical as a super ally in jet engines, in rods for nuclear reactors, also space technology, space rocket engines. So as we sort of pivot, or as space exploration becomes a fully fledged space industry, and we'll also probably have more nuclear energy coming, and of course
Hmm.
aviation is already growing. The demand for hafnium is increasing, but there's an inflexibility or an inelasticity to the supply of hafnium because it's a byproduct of zirconium mining. So that's what makes them a good investment. Like I'll give you actually a very good example as well is when we came out of COVID. Um, can you hear that in the background?
I actually, you can hear me smiling. I can. I mean, this is a lot. We're recording. It's a podcast, and the dogs. I don't know if someone's at the door, but yeah, I can hear. It's okay.
Okay, it
But
seems to have stopped now anyway.
yeah,
So sorry about that, but
it's all
that's
good.
an Irish dog
Yeah, no, it's all
barking in
good.
Irish. But so yeah. So what I was saying about hafnium was when we came out, all there was no planes flying for 2 years during COVID, right? But when we came out of lockdown, when Boeing and Airbus put in these orders again, and aviation was back, hafnium went up 250 something percent in 18 months because there was the supply. Just because there was an increase in demand doesn't mean supply could keep up. It can't, because it's tied in to the recovery of hafnium is tied in to zirconium mining. So these are the characteristics that determine what make them sort of interesting as physical assets. Is you have these scarcity driven price increases that occur, and investors can profit from them.
Yeah, I mean, that's really, really neat. Okay, so zirconium. I mean, when I think zirconium, I think cubic zirconium. Is that this what we're talking about here, or is that what is zirconium used for?
Well, we don't actually sell zirconium. We don't work with base metals.
No, I'm just kind of wondering as a general
Oh,
uh,
multiple. I mean,
definition,
yeah, multiple applications. Yeah, yeah. Um, all sorts of applications for zirconium
like plastics, jewelry, costume jewelry, that type of thing.
industry.
So you're talking about it's really interesting to me. So you're talking about an industry that depends on hafnium, like nuclear power, like space technology, and I mean, you know, you talk about how space technology in the next 2 decades, in conjunction with things like AI. I mean, who knows? It's just like a futuristic movie, and yet the supply is based on a completely different industry.
Yeah,
I mean,
yeah,
yeah, wow.
yeah.
Okay, no, that kind of blows my mind a
Yeah,
little
you
bit.
nailed it there, Garrett. Funny enough, you mentioned AI. So AI obviously, relies on data, or sorry, runs on data, but it relies on rare earths, for the magnets and the sensors, to power
Sure.
the data centers. And there's another one example recently would be terbium, which is in semiconductors. Um, when we went into lockdown, terbium went up something like 500% in about a 2 3 year period, let me say. And the reason was demand. Everybody was going to work from home globally, so demand for home computers, laptops, any.
Yes.
So the demand surged, but because again, terbium there's no specific mine for terbium, and there's an inflexibility, there's an inelasticity to supply. Same thing happened again. We had these scarcity driven price increases. But it's right about now, though, is how and why it's getting really, really interesting. And what I mean by that is between now and 2030 and 2035, and even into the 2040s, is the demand for rare earths, just let's say for energy transition alone, for what's needed for electric cars, for solar, for wind, that will not peak until the 2040s. Then we have, which just came out of nowhere. Well, not out of nowhere, but since, Russia invaded Ukraine and we have this thing in the Middle East, defense metals. And these are also considered defense metals. So Europe is going to, over the next 5 years, put a massive amount of money into defense for the first time since the end of World War II. So we're going to have a massive demand coming in from defense. Then we have artificial intelligence. And then we have just normal modern technology, medical devices, you name it. I mean, the world runs on these metals. And also what's occurring now, and sort of proof of that would be we're entering into a period of what you might call resource nationalism. So you could say we're going from globalization to de-globalization, because in the 1980s, I think the U.S. MP Mountain Pass in California was producing most of the world's rare earths, and China was producing maybe 15, 16%. Now China pretty much dominates the production, and the reason is Europe and the US sort of allowed that to happen when we were in that globalization phase, when we were high, if you will, on the globalization drug. And we thought, well, look, China has the resources; they can do it for less money. So why don't we just let them do it, and we'll buy these raw materials for less than we can produce them, and they'll go into our cars and our computers. But I think Europe and the US just sort of took their eye off the ball, and now they've realized, well, it's actually not a great idea to have, say, one mine in Africa or one supplier in China to have a complete sort of unrivaled dominance in the supply of a raw material like gallium. Gallium is 98% produced in China. Gallium has over 3,000 military applications as well as civilian uses. So that's why when you heard President Trump earlier in the year talking about Ukraine, I mean, they value rare earths so much they would use them as leverage to end the war there. When they were talking about Greenland, let's make no mistake, they're not talking about going skiing there. They're going there because there's raw materials and resources there. So yeah, they are. I suppose another way to look at it, Garrett, would be the world is sort of pivoting to some extent from oil and gas to metals, and rare earths are the new front line in geopolitical decisions.
It's what the thought that just occurred to me: supply, demand. And you're talking about 250, 300% increases at certain periods of time. Can you think, I always like to think of worst case scenarios as well for any kind of investment. Has there been cases, and I'm sure there has, where rare earths have just plummeted because of something that occurs in the world market, or an industry gets decimated by something and they no longer need that rare earth? Does that happen in this asset class?
Well, for example, we used terbium as an example there. It went up 500%. Now it has since corrected. Do you know what I mean? Since then, so
Oh, corrections are different
yeah,
though. That's
okay,
more market sentiment, I guess. But I'm just saying the reason why it went up was because there's this demand or perceived demand. Are there cases in the world where a rare earth no longer is needed because maybe some another rare earth gets discovered and the application is better, so we no longer need terbium or
good
something
point.
like
Yeah,
that?
no, good question, Garrett. So we look. Just so you know, like we're in business since 1999 as an industry supplier. So we've lots of experience there. And it's only though since about 2010 we've been offering rare earths to private investors. And the reason is, we saw that, sometime in the future and now, there would be shortages and there would be periods when there just wouldn't be not only supply bottlenecks, but there wouldn't be rare earths available. And to be honest with you, up till now, we haven't had any scenario like that. We have had scarcity-driven price increases because of a geopolitical decision, or and one of the reasons is it's in a way it's the dawning of the era. Dawning of the era of rare earths. You know, these raw materials, they were literally waste. Until in the 1960s, when we went from black and white TVs to color TVs, we found a use for them in the color screens. And then in the 80s, when the internet and technology arrived, and ever since then, even gallium, for example, I read yesterday, um, it's been tested. It's not on the market yet, but it may well be used in cancer treatments as well. So we're at the very beginning of the age of these raw materials. But going to your broader point, yes, pros and cons. One of the downsides could be, I talked about indium. You can swipe your phone because of indium. Somebody might come up with a better metal or a better technology to scroll or swipe tomorrow, and therefore, obviously, the indium demand would go down. Luckily, though, they all have multiple applications. Civilian and military and stuff like that. So yeah, we haven't had anything drastic like that happen. Um, Generally, by and large, they're sort of increasing in value. And here's something that you'll find interesting as well, Garrett. Um, Geologists call them trace metals because they're found in very low concentrations in the Earth's crust. Manufacturers like Apple and stuff call them spice metals, and that's a lovely term for their application is. So they're used in very low concentrations. I mentioned indium. Um, Indium might only represent 0.01% of the makeup of a phone. So they're like spice in food. They're in very low concentrations. However, what that also means is if the price of indium goes up 100% or 50%, Apple will just absorb the cost. And the reason is it's far more catastrophic for a manufacturer, for production to shut down on the iPhone than it is for them to pay a 50% increase for a raw material that only represents less than 0.02% of the makeup. So anytime you have these scarcity driven increases, the manufacturers just absorb them and pass them along to the consumer.
So what does that do for? I mean, typically you would think if they were to increase, then it just you get these prices all over the place, just like you would with wood and traditional things that have happened over the last decade. Um, what does that mean as an investment? Does that make it more stable or less desirable when the manufacturers are not adjusting based on their supply prices?
Well, how do you mean not? Could you sort of rephrase that?
Yeah, no, it's just the way my mind is working. I'm just kind of thinking. So you made a statement saying, like, for indium, let's say it goes up, five times, 500%,
Hmm.
and a manufacturer will just absorb that cost because the that it's better for them to pay something a premium on something in a phone that's 0.01% versus increasing the phone by even $5, and that just all of a sudden sets off some kind of catastrophic sales crisis,
Hmm.
right? Is that kind of
Yes.
accurate?
Yes.
Yeah. Okay. No, I was just I was my follow up question to that is, does that um, inaction by a manufacturer do anything to the scarcity or the desirability of investing in that in rare
Okay.
earth
Good
metals?
point. Yeah. So, yeah. I suppose I'll preface that answer just with it's important that people know something about us as well. Is that we're not we don't like our core business, our DNA is metals. We buy and sell metals, and our core business, 85% of our business activities, we're buying these metals and we resell them to manufacturers. The offer to private investors is what you guys in North America might call our side hustle. It's our side business. And so we don't have 10 other offers. We don't offer crypto. We don't do agriculture or who knows. We only have one offer, and it's the offer of metals, which is where our expertise is. So before anybody invests, we always have a sort of a frank and sincere conversation and say, look, we have a winning, even I would add, a winning investment strategy here. However, if you're not aligned with it, please don't buy the metals. And the investment strategy is to hold them for a minimum. I don't even like to say 3 years, but we do minimum 3 years, but 5 years is even better. So you can actually make, properly, make some gains. We don't want day traders, or we don't want people coming and thinking they'll make a lot of money in 6 months. And now that can happen. They can spike. Now I gave some extreme examples of what's happened, say, in the last 5 years, but there are other metals there that are steadily increasing. Maybe 8, 10% a year, maybe 20, and then there can be a spike. And if there's a spike, we recommend our investors then. Not only do we recommend, but we we offer to buy them back. So I'll give you a very recent example, Garrett. On April the 4th, China one of their countermeasures to the tariffs announced by Trump was also tariffs, but also, if somebody looked closely, they banned they restricted, I should say, the export of 7 rare earths. Two of those were on our two that we offer to private investors, dysprosium and terbium. So no dysprosium or terbium have left China since April the 4th. We have our own inventory in Frankfurt, but we also have the inventory of investors, and there has been a shortage globally of these two raw materials. So we've sent emails to every client of ours that owns these two. We've sent an email to say, look, now is a good time to enter the supply chain. There's a shortage. We'll offer you current market value plus 20%. Now, since then, that went up to 40%. So we encourage, and again, at the end of the day, if somebody buys the metals, they can sell them in 6 months or 6 years. It's up to them because they physically own the asset. But we strongly suggest to people, please don't buy them unless you're willing to hold for 5 years, so you can benefit from one of these scarcity-driven price increases, or just benefit from the demand that's steadily growing anyway. Does that make sense?
It does. It does. What? So if you're offering in, let's call it an up market, I guess a seller's market to buy back, how? I mean, I'm just going to ask why. Like, how is Strategic Metals Invest? I mean, obviously you're going to sell that. I mean, what's your benefit for doing that other than having happy customers?
Well, to have happy customers on both sides. So bear in mind our core business. We have over 4,000 industry clients in 74 different countries. And the
I
whole
see.
reason we've created this offer to private investors, I mean, is when there's a shortage, there's an inventory we can reach for. We've a
Okay.
vault in Frankfurt. It's got over 300 metric tons of inventory, and so our priority is always our industry clients, manufacturers all over the world, and it's this what happened just in the last 2 months has proven that this sort of forward thinking, forward planning strategy has worked, because we've been able to supply manufacturers when there's a shortage, and we've been able to buy back from the private investors, and people are making money. Now, not all of them have sold, because I think a few of them are thinking, if these guys are offering me 40%, I'm sure there's better to come, and they may well be right, but we'll have to see. But yeah, that's it. It's just a lovely example of how it worked. That it will work well over that period. That hasn't happened now. I tell you, in the last 15 years, there's been 3 or 4 occasions when there were real shortages. One was 2010, which sort of inspired us to start building an inventory. Was the Japanese detained, and you can Google this, you'll see the Japanese detained a Chinese trawler, or the captain of the trawler, for fishing in disputed waters. In response, China restricted the export of rare earths to Japan. And so we had shortages. We had prices, 3x and 5x in the space of 3 or 5 months. Took a few months and a few years to straighten it all out, but scarcity driven price increase. And everything was pretty normal then, let's say between 2012, 2014, 2020, and then COVID. Scarcity driven price increases, terbium up 5, all of them went up a lot during that period, but some of them went up more when we came back out of it, when things sort of ramped up again. And now recently we have the sort of economic weaponization of rare earths by China. I mean, China, in fairness, has had a very forward-thinking strategy for rare. I think China understood long before Europe or the US how important these raw materials would be in the 21st century. Um, I think they really did, and now they can enjoy that position. They have an unrivaled dominance, and they've 50% of the world's reserves, but they're the largest sort of importer exporter of rare earths, and they can they've just weaponized them successfully in the last sort of 60 days.
Yeah, I mean, you use the word weaponize, but I mean, it's really. I think I'm overusing the word interesting and fascinating during this podcast because I'm learning so much about these things. But the fact that you can cripple an economy, hurt another country by just restricting your own
Mm-hmm.
exports is something that I mean, it's warfare of a different name. Yeah, it's really again fascinating. Take me back a little bit, Louis, because when we talk about investing into anything, okay, obviously I'm a real estate investor. You're a real estate investor. I'm going to buy a house. I can see it. I can touch it. I can put a tenant in place. I can plunge a toilet or not, or I can invest in a fund that buys that house, buys that apartment block, et cetera, et cetera. And that's the way my brain is kind of programmed when we think about things like gold, unless I'm buying gold coins and I'm putting in my safety deposit box. Can you kind of explain to the audience the difference between precious metal investment and what you're offering, and then physically owning a, a rare earth metal?
Yeah, good question, Garrett. So in truth, it's owning rare earths, gallium, germanium, dysprosium, thorium. It's the exact same paradigm as owning gold and silver. So our clients, physically own the asset. And, as I said, we have a logistics and distribution platform in Frankfurt. It was a bunker in World War II, 2 levels below ground. And, we bought it in 2010, and it's now a bank level secure vault with 2.5 meter or 3.5 meter walls and doors and stuff. We actually also store precious metals there as well. So we have our own inventory. We store for some of our manufacturers. There's many blue chip companies now are looking to sort of strategically stockpile these raw materials, and then we also store for private investors. So if we start, we're based in Europe, but if somebody wants to come over from Canada, US, they're very welcome to touch it, see it, feel it. We have an office of 45, 50 people in Frankfurt, and the vault, one of the vaults is obviously a completely separate area to that. So it's exactly like buying gold and silver and storing it, whether it's in Switzerland or Singapore or Delaware or Ontario. They physically own the asset, and the liquidation process will be when they're ready to sell, they'll come to us and we will buy the metals back for our inventory, or we'll immediately mediate a sale to one of our industry buyers.
Okay. Yeah, because I'm thinking you're not shipping a gram of indium to somebody in an envelope and they have to put it in their home
No,
safe,
and if
right?
I was saying that, Garrett, there'll be alarm bells going off everywhere and red flags everywhere, because look, the only end buyer for gallium or indium is Samsung or Apple or whoever it might be. If I was just a crazy Irishman saying, "Oh yeah, there's a shortage, we'll buy them," from China. You can keep them
Yeah.
there in
Here's
Florida.
my overcoat. You've got my inventory
Yeah,
here,
and then
right?
we sell them to NASA. Like, the thing about it is, like, obviously the chain of custody is one of the most important things. So whether it's the U.S. Department of Defense, whether it's Siemens, Samsung, BMW, they won't buy raw materials even from us unless they're still in the original packaging from the producer. So the chain of custody must be intact at all times. And I've had a couple of clients in the US say, no, Louis, I like to keep my metals close to home. I want you to ship them here to me and wherever I am. And And I say, look, we don't want to sell them to you in that. We could, but that's going to, there's all sorts of complications. For example, let's say we shipped gallium to a gentleman, say in Texas, and it gets to the port in Texas. First thing US Customs will see is this has civilian and military applications. Why is this guy importing it? So it might not even get past customs, and then they'll be back to us saying, "Hey, you sold me this stuff, and now I can't even get it." So we just say, "Look, we'd refuse that type of order or client because we don't want uncomfortable situations for ourselves, or for private investors." So yeah, it's as you said earlier, Garrett. It's a niche product. It's not not on the top of There's not many people waking up in the morning going, "Hey, I want to buy gallium today. How can I do it?" But funnily enough, that we're talking now in 2025 is in the last 6 months, I've never heard as many heads of state, from Canada, from France, from America, talk about rare earths as I've had in the last 10 years. So this, like the president of the European Union said, rare earths have become or are fast becoming as important as oil and gas. So yeah, I think you will be hearing more about them. But it's a very niche product, and unless you're buying from a recognized industry supplier who has access to industry grade gallium and who can also assist, or who has a practice of selling them elsewhere, it's not safe unless you're a hobbyist and you want, if you're a hobbyist, go to eBay or Amazon. But if you want to make money, deal with a reputable supplier like ourselves.
Well, you use the term chain of custody. And I mean, to me, if you break that chain of custody and somebody shows up with what they claim is a rare earth metal, the verification process is going to add cost unnecessarily. So why, if you're an industry titan like yourselves, why would you even entertain that? Is that kind of the road you're
Exactly.
going down?
Exactly. We wouldn't. And you're 100% right, Garrett. We would. We only buy rare earths or raw materials from two sources: one from suppliers, and two from private investors who we originally marketed the raw material to, because it's still in its original packaging in the distribution and logistics platform in Frankfurt. So although our clients physically own, and it might be in a barrel, it might be in a 10 kg barrel or a 25 kg barrel, it's still in the original packaging from the producer, and that's how the end receiver will receive it as well. So yeah, it's hugely important.
Yeah. Walk me through, if I mean, let's just speak in generalities in terms of returns, because I know that's the burning question that my audience is probably listening to. Like, you know, we know what a traditional, I know you can't promise returns, but can you kind of walk me through the last 30 years what somebody might, if they hold something for 3 to 5 years, what a return might be as an industry average?
Sure. So we recently had a client who traveled from Hawaii, but he's actually from the US, and he's an engineer. He's sort of into real estate and different stuff now, but he really did his homework. He really did his homework, and him and his team, because he did the numbers. And now, first of all, I want to say, Garrett, we've only been offering these to private investors since about 2010. So our numbers only go back as far as that. But if you had bought these raw materials anytime from 2010 till now and held them for a minimum of 3 years, you would have made money. The average gains, like I said, I used extreme examples. Terbium went up 500%. Hafnium went up 250 at one point. But the average gains, let's say across the board, is about, if I just want to be sure I'm accurate now, say like for the last 5 years, is about 34% a year. Um, if you'd bought, so I just want to add as well, there's 45 to 50 metals we sell to industry, but at any given time, there's only about 8 or 10 we offer to private investors, because they have certain characteristics that deem them relevant as physical assets. Some of the other rare earths aren't that rare. They're as common as copper. So we only offer metals to private investors that have one of four different characteristics The first one is quantitative, which is which ones are the most in demand: AI, energy transition, defense metals. Which ones are the least produced: hafnium, gallium, stuff like that. Where is there a supply concentration risk, where China is a good example, or maybe where there's one mine that is only producing. And then finally, which ones have the most applications. So that's how we determine what makes the list. So we don't, as I said, there's 45, 50 metals listed as critical by the US Geological Survey, as critical to all nations' economic prosperity, but we only sell maybe 8 or 10 of them to private investors. But yeah, you know, this might sound like a big fat claim, but it's absolutely true, and people can mathematically certify it. Is any of our clients who've bought metals and stayed in alignment with our recommended strategy, 3 to 5 years, have made money. Every single one. Nobody has lost money.
Okay. No, that's great. That's great. What is the investment path look like? I mean, let's say that I'm interested in this. Is there a minimum amount? Do you kind of like walk me through the customer onboarding
Sure.
process, I guess?
So the minimum investment is just $10,000, and clients could buy one metal for that, or they can buy 5 or 6. Um, And initially, if somebody decides to go ahead, look, we want to get people educated first of all, because we know when somebody's buying these for the first time, it's the first time they're buying them. So we do spend a good bit of time in information gathering, and we get them familiar with each metal as well individually. But we do recommend some sort of diversification. So we always say, is there a particular industry you're interested in? AI, technology, aviation, defense, whatever it might be, and we'll introduce them to the metals then. And then when somebody says is ready to go further, we create an offer for them, which is not binding on the client's side, but it's binding on our side. So we create it. It looks exactly like a pro forma invoice, but it's an offer, so it's not binding. And that will list, the gallium, the purity levels, the chain of custody. We show them, get them a chance to see exactly what it is they're purchasing. Once they accept the offer, then we send them an invoice, with bank transfer details and stuff. And then once they transfer the funds, now we'll only make the offer if we have that raw material in the inventory. So, if you've received an offer, we have that in stock. And once the funds are received, then obviously we confirm receipt of funds, but we then send a storage agreement to be signed and returned to us. Once we receive that, we then issue a sort of a commercially paid invoice and what we call a safekeeping receipt, which is basically the account statement from the vault. The vault and the industry you buy them from Tradium, which is our industry business, but the vault are completely separate legal entities for safety in case something happened to one company. So you receive then your credited account statement, also known as safekeeping receipt, to show these goods have been allocated to you in the vault. And that sort of concludes the transaction until, of course, people can then look at their portfolio and monitor and manage the gains. They can sort of buy and sell as well. I should mention the vault in Frankfurt is a duty-free zone, so clients don't pay in Europe any duties or taxes or VAT when they purchase or when they sell. Now, their own, domestic, wherever they're domiciled, those tax responsibilities are theirs, but there's no taxes on our side once, because it's a duty-free facility.
And then things like capital gains, because it is an investment of sort.
Yes, that would be up to, like for example, I don't know if Canada has, but I know the US has global taxation. So,
Hmm.
commodities held overseas need to be reported. Yeah, my understanding, um, obviously you don't want to be taking tax advice from an Irishman in Tipperary, but
Or a real estate guy either. So,
yeah, exactly. So, but the point is, well, from my end, what I can validate is that the vault is duty free. You don't pay any duty or VAT or taxes when you buy them from us or when you sell them back to us. However, capital gains and stuff would be your responsibility in your
Of
wherever
course.
you're domiciled for taxes.
Yeah. No, that's great. Let's I want to shift back to the global picture because I mean, just hearing about what you're doing and just having to have your ear to the ground in all these different industries, like China, I think you mentioned controls the majority of the output. So, from a risk standpoint, what risks are there other than, like we talked about, the benefit, right? Because then the rare earths are going to go up. Are there any other risks from a global leader in that sector closing off the supply for an investor?
Good question. So obviously, from our standpoint, we're actually the only supplier in the world, and I can say that with certainty at the moment, that actually invites private investors to own these raw materials. I mean, you can invest in a mine, and at the moment, I mean, the U.S. Department of Defense just signed a contract with MP Materials in California to offtake these raw materials for them. So one thing's for sure, Garrett. The US and Europe realize, we have to wean our dependence off China somewhat. I don't think that can happen. It can definitely not happen overnight, and I don't think it will ever happen completely. So, what we are going to see over the next 5, 10, 15 years is, Linus Corp in Australia is the largest producer outside of China. Um, Rare earths, despite the name, are not always rare. There's 500,000, which is obviously 500,000 abandoned coal mines in the US alone, which have mine tailings. There's rare earths in there. But here's the kicker: the technology, which is it's more of a metallurgical process than a mining process. And what I mean by that is rare earths are all very chemically similar, so you'll find them sort of in low concentrations, and they have to be extracted, they have to be separated, and then they have to be remetallized to purity levels of 99.999%. So in the last, well, let's put it this way: China has about 28 universities graduating degrees in metallurgy. So China's been graduating probably 200 metallurgists a week every week for the last 30 years. That sort of that engineering expertise, that human capital does not exist in North America or Europe. So it's not just a question, if they're in Ukraine or if they're in Greenland or if they're in MP materials in California. It's that refining, it's that technology and that human expertise that doesn't exist. So for the immediate future, China will have an unrivaled domination, which also gives them the ability to discourage investment. I mean, they can control the price. So we are heading into a very, very interesting period. But the most important thing is we're in the age of rare earths, smartphones, space technology, AI, you name it. Um, we're going to need, we need them, and we need more and more of them. So it'll just be interesting to see, how China will respond to, um, you know, to other, startups, if you will, because let's say, in America, believe it or not, the time period to go from maiden discovery to production, or sorry, to being in a product for a new raw material is 29 years. People are leaving the mining industry; they're not joining it. Apparently, there's about 100,000 people working in mining in America at the moment, and half of those people are going to retire by 2030, and they're not being replaced. Um, so Europe is the same, So it'll be interesting to see, but all we know is at the moment China has an unrivaled dominance, and everybody needs and wants these raw materials.
Well, I think I had read, or maybe it was in some of your material when I did research on you about Ukraine, potentially thinking about paying back U.S. aid in critical materials and critical minerals. What does that kind of tell us? Like you said, about the future.
Yes, yes. And funny enough, there, I think couple of times President Trump mentioned rare earth minerals, and he sort of mispronounced that. He should have been just saying critical minerals, because Ukraine. I mean, I don't know. Maybe the it just looks good on TV to say that the optics look good that we're getting something from this deal. But let's be honest, right? First and foremost, for mining, you need a lot of infrastructure. You need a lot of energy. You need a lot of water. And that's just for the mining part of it, right? You also need the country where you're mining to also have infrastructure. Ukraine's being destroyed, so Ukraine doesn't have the infrastructure just as a functioning country. Never mind then the data from Ukraine is Soviet era data. So the information they're basing that on is 40 years old. Quite a bit of that as well as in what's under Soviet, or sorry, not Soviet, Russian control. So, that's just looked good on TV. The fact and the reality is, sure, why would you go to Ukraine when there's 500,000 abandoned coal mines in America that have rare earths? Why would you go to Ukraine when there's Mountain Pass or MP materials in California? Now, it doesn't mean it's not a good idea, but it's not going to save the day, and it might not economically make sense to do it either. But I guess it looks good, and looks like they're getting something for your money.
Yeah, healthy dose of skepticism on my part too, Louis. No, this has been a really, really insightful conversation. I've really enjoyed it. Before I let you go, though, I always ask a guest the same question every time, and I want to hear what you have to say. So, this is the Investing to Win podcast. How do you define success, and what does winning look like for you?
Good question. Good question. Nothing I say is original, Garrett. Everything I've learned along the way. So this is not, but my favorite definition of success or winning is that you can't be successful. You can have a successful day. You can have a great day. But success is more about a lifestyle or a way of life or a way to live. And I have a certain I do. I'm happy to say through I've learned more from getting it wrong than getting it right, but I'm happy to say I've learned, and so I've a certain definitely have nowadays some guiding principles that allow me mostly to have a successful day, and so that's to me a success, and that's got a lot to do with as well, obviously, how you live your daily life with your family and your community and stuff like that as well. So yeah, I don't think it's a destination; it's a journey, and I think one needs to decide what does a good day look like. How will I, what would I have to do to feel good at the end? What contributions have I made, and not just about money, if you know what I mean. So yeah, to me, it's about yeah, not being success, not becoming successful or arriving there, but constantly striving, I suppose, to improve.
Yeah, I can't agree with you more, Louis. For me, the more that I do these things and the more I get into the business world, it is our failures that does define our successes. So very well put. Thanks
Thank
again
you.
for hanging out with me for the last hour. I have learned a ton. You can see that I got pen to paper here. I'll put your information into the show notes because I think this is a very viable and interesting thing that you guys are doing, and an asset class that I think everybody should look into.
Thank you, Garrett.
All right, take care, Louis.